Yes, a very good afternoon. Right, so we completed with SA240, the auditor's responsibilities relating to fraud in an audit of financial statements. Right, so an exclusive standard only talking about the audit procedures in relation to fraud. Right, and as per SA240, there are two types of fraud. Fraudulent financial reporting and misappropriation of assets. Right, and then fraud risk factors is equal to events, conditions or situations which provide an incentive, pressure or which provide an opportunity to commit a fraud. And then we also said clause 10 of CARO 2016. Any fraud on or by the company by its officers or employee noticed or reported during the year. And then 143.12, duty to report the fraud to central government. And then we also said management override of controls is equal to JV testing. And then we talked about the risk assessment procedures and the responses in SA240. Right, risk assessment procedures, they were IIAFRF. Inquiries of management and others within the entity, inquiries of TCWG, analytical procedures and the evaluation of the fraud risk factors. Inquiries of management, have they done the risk assessment due to fraud? What are the responses of the management to the risk assessed? What communication has the management done with TCWG regarding fraud? What communication with the employees regarding the unethical behavior of the employees? And also the communication, the inquiries with the internal auditors. Then TCWG, do they have knowledge of any fraud, and also how are they supervising the management process? Then analytical procedures, wherever it is unusual fluctuation, again it could be an RMM due to fraud, and then you need to do the evaluation of the fraud risk factors, again which have been first divided under the two types of fraud: fraudulent financial reporting and misappropriation of assets. Under fraudulent financial reporting, we said management characteristics and influence over the control environment, industry conditions, operating characteristics and financial stability. So rather the indications of going concern. Financial indications, operating indications of going concern. And then over here we said attitudes and rationalizations, pressures and incentives and opportunities to commit a fraud. Right? Then after that, whatever risk we assess in SA240 is called as fraud risk. And to presume fraud risk in SA240, one, revenue recognition, and second, MOC, management override of controls. And then what are the responses of the auditor? More of an attitude of professional skepticism, more experienced staff, increased evaluation of accounting principles and practices, and more sensitivity to the possibility of management override of controls. Yes, it says this risk is nevertheless present in all entities. It may only vary from entity to entity. So as an auditor, we need to make inquiries of the management, inquiries of those individuals who are passing these journal entries into the system. Then test check journal entries at the end of the period as well as throughout the period. Also check the amount. The amount over here is going to be an estimate, and estimates means there could be management bias, and that we audit it in accordance with SA 540. And then in the audit procedures, we discuss firstly, secondly, thirdly, and finally. Firstly, to check whether the financial statements are materially misstated due to fraud, and also whether the audit risk requires revision, revision of the assessment of audit risk. Second, the impact of the fraud on the financial statements and the auditor's report. Thirdly, communicate to management TCWG. And finally, this will also impact the reliability of the written representations obtained as per SA 580. And then towards the end of the answer, you have to write 10-12. Clause 10 of CARO 2016 and section 143.12, duty to report the fraud to CG. Right. Then after that, we came to SQC1. and a quality control for firms that perform audits and reviews of historical financial information and other assurance and related services engagement. So rather SQC1 is talking about the design, implementation and maintenance of a quality control system in the CA firm. And what are the elements of this quality control system? LEHAB. Leadership responsibilities, ethical requirements including independence, acceptance and continuance of the client, human resources, engagement, performance and monitoring. Leadership responsibilities, it says you need to identify the leader. Say the CEO, the senior most partner, the managing partner of the firm. The responsibility should be given to experienced and able persons in the firm. Then they should design policies and procedures as required by SQC1 and communicate to the firm personnel by training, formal, informal dialogue, seminar, etc. Then there should be policies and procedures in the firm to ensure compliance with the ethical requirements including independence, IOC, CPT. And then independence, there should be procedures to identify are there any threats to independence. Then what are the steps taken to reduce or eliminate these threats? And if you cannot reduce or eliminate, then you may even decide to withdraw from the engagement. And also an annual declaration of independence is to be taken from all the firm personnel. Then acceptance and continuance of the client relationship. One, management integrity. Second, do you have the CCTR, the competence, capability, time and resources? And third, whether you can comply with the ethical requirements including independence. Then human resources, recruitment process to select individuals of integrity. Then performance evaluation. Then training programs, right? Taking care of their competence. And the last one, the career development needs. Right, and then we had just written down the headings for engagement performance. And monitoring I had already discussed with you. And it's like you're doing the OE, the TOC of the policies and procedures in the CA firm. So I can call it as quality audit. And monitoring was there in CRISM also. No, there it was internal audit. And you remember CRISM, SA220, 5 components of internal control. So similarly, monitoring over here is quality audit, whether all these policies and procedures of the firm, are they being followed or not? All these policies and procedures of the firm, are they being followed or not? That is what is checked in monitoring. Right, so now I come to the one heading which we are left with, that is engagement performance. And under engagement performance, we have 5 headings which you've already written. Direction, supervision, review, DSR, EQCR, engagement quality control review, then consultation. Then after that, engagement documentation. Engagement documentation. And the last one, differences of opinion. Right, last one is regarding the differences of opinion. Right, first one, DSR, direction, supervision and review. It is talking about direction, supervision, yes, supervision and review. Right, direction towards the start of the engagement, supervision during the engagement and review towards the end of the engagement. Direction means preparing an audit plan, preparing an audit program, selection of the engagement team members, deciding upon the nature, timing and extent of audit procedures, identifying the areas where the work of an expert will be required, identifying the procedures to be followed to comply with the standards on auditing, identifying the time which will be required for the conduct of the audit. That is direction. You've been appointed to do the audit of Geo Limited and now you're preparing your audit plan. Your team senior, your partner, they're preparing the audit plan. So what is that? That is direction. Then once the work has been planned, your audit plan or audit strategy is necessary. Then after that, they actually start doing the work, the engagement team members. And then as and when the work is going on, you're tracking the progress of the work. That is supervision. Like, it was written by 12th of April, cash and bank should be done. So, the team senior, the manager on the assignment checks whether today is 12th April, so whether cash and bank is done. whether any difficulties are being faced by the members of engagement team, whether any change in the composition of the engagement team is required, are there any change in the audit risk assessment which is to be done. Okay, initially you thought that provisions is not an RMM, but as and when you started performing the procedures, you realized no, there is a lot of risk in provisions. So then you again decide to revise your audit risk. So all this is taking place at which stage? At the supervision stage. Initially you thought, okay, this I can do it on my own. Then later on you thought, no, okay, for this we will have to use the work of an expert. Like, sometimes first you think, okay, audit subject I can study on my own. Then later on you decide, okay, no, I need to join a class for the subject. You understand? No, right? So that is supervision, yani tracking the progress. And whether sufficient appropriate evidence is being obtained, or are there any limitations on scope imposed by the management? Are there any difficulties encountered? Is any revision to audit risk required? Is any change in the composition of team members required? That is supervision. And after the work has been completed by the members of the engagement team, the respective person to whom that work has been assigned, it is required to be reviewed by a senior. Right, so that is the last one, the review of the work done. So like, say there will be these articles who are working on that particular assignment. These articles work will be reviewed by the team senior. Then the team senior's work will be reviewed by the manager on the assignment. And then say the management's work will be reviewed by the engagement partner. His work will be reviewed by the engagement partner. Right? Obviously, जितना detail में team senior का review होगा, उतना detail में manager का review नहीं होगा. जितना detail में manager का review होगा, उतना detail में engagement partner review won't happen. Say team senior review may take 4 days. Manager review may get over in 1 day, and partner review will get over in 2 hours. Partner क्या 2 hours में they clear a file. You understand? Any audit, you complete the assignment, the file goes on the partner's table, and within 1.5 to 2 hours, file signed, report signed, audit over. It goes in the cupboard also. You understand? So that is review. Whether sufficient appropriate audit evidence has been obtained, whether the audit has been done in accordance with the standards, what were the RMM identified, what were the significant risks identified, how did the auditor respond to those risks, what did they do of all the misstatements identified during the audit, whether the auditor was independent of the entity for who he has done the audit, whether adequate audit documentation has been obtained by the auditor. This is all what is checked in the review before you issue the report. Okay, whether the report being issued by the auditor, is it appropriate? So it's like, say, you take a vessel and you boil 2 liters of milk in it. Okay, so once the milk is boiled, okay, then after that you pick up that vessel from the gas burner and you keep it aside. And then if you look at that milk after 2 hours or so, you see the entire cream has come on the top. So similarly, now you've done the entire audit, say for last 20 days. And at the end of the audit, whatever cream matters, obviously everything won't be a cream matter, no. There will be a few important matters in the audit, like, where significant judgment was involved, which required you to modify your opinion. Only those areas the engagement partner will go through. Only the cream matters in the audit. He is not going to check again each and every voucher which has been checked by article, each and every tick which has been put over there, each and every casting and totaling and all. You understand now? So only the cream matters in the audit. And when the partner comes for the review on the assignment, what does he say? Issues batao. And okay, what all were the problems which you came across in this assignment? Right? So that is review. You understand? Direction, supervision and review. Okay, right. So that is regarding the DSR. So obviously for your audit to be or your engagement to be of good quality, don't you think there has to be proper DSR, direction, supervision and review? Right. Then after that they talk about another concept over here, which is the EQCR. That is the Engagement Quality Control Review. So like, say once your exam forms for May 17, November 17, they come out. Okay, then you fill up your exam form online, then you take a hard copy, you fill in some details over there, group which you are going to write, which is the center which you want, with what DD, all those details if you're not doing online payment. So all those, then the articleship completion ka certificate, P2 ka result, all that you will put it, photograph and all. Then you'll take the attestation of some CA on that. Okay, and now all your set is ready. Okay, and say tomorrow you are going to the institute to submit this particular set. You understand? Your exam form ka set, say tomorrow you are going to go to ICAI, you are going to put it by courier, whatever. And you are going to send it. Okay, so say you are going to go to the institute's office tomorrow. Now today you have already checked it 3 times on your own. Whether everything has been correctly filled, you've checked it 3 times. Now tomorrow you tell one of your friend, "Arey, I wanted to go to institute, will you come with me?" So generally friend will say yes only. बोले हाँ मुझे भी देखना है, suggested आया है क्या, practice manual नया आया है क्या, तो I'll come with you. So your friend comes with you and then you go to the institute and now you are about to submit the exam form. Your responsibility, you have filled it, your responsibility. But before you submit it to ICAI, your friend who is with you, you tell him, "Ek baar dekh lena." You understand? Ek bar, in overall, whether everything is okay or not. Similarly, over here, the articles have done the work, the team senior has done the work, has done the review, manager has done the checking, and now the partner is going to sign the report. But before the partner signs the report, he tells another CA in the firm, who may be a partner or who may be an employee. And in case of a sole proprietorship, it could be a suitably qualified external person. Who is called as the EQCR, the Engagement Quality Control Reviewer, to quickly go through your audit file and the audit report to be issued. The work of one CA being checked by another CA in the same firm before the report is issued. Very important. Before the report is issued. An objective evaluation of the significant judgments made. An objective evaluation of the significant judgments made. An objective evaluation of the significant judgments made. So just as I told you, all the cream matters in the audit. So say we are doing the audit of Geo Limited. We are all the members of the engagement team. We are going to issue, the engagement partner is going to sign the report. Now what we do, before signing the report, we tell another CA in the firm. Now has he been a part of the Geo Limited audit team? No. But he is just another member of the firm, partner or employee of the firm. We tell him, third party view. Just overall, go through our audit report and our audit file on a prima facie basis. That is engagement quality control review. Is for all audits in EQCR compulsory? It says listed entity audit EQCR compulsory, others left at the discretion of the firm. So if you are doing the audit of Tata Motors, before issuing their report, a EQCR, you have to get a EQCR of the file done. And other than listed entity, it says firm, if you want to get it done, you get it done. If you don't want, you don't get it done. So in the audit file, these firms, they have a EQCR docket. In that it is written, who is the EQCR partner or employee, then what are the observations of the EQCR, how they have been resolved, and then the EQCR will sign. And then after that, the engagement partner can sign the audit report. So you have to get the EQCR clearance of the file done for listed entity audit compulsory. And then after that, the engagement partner will sign the audit report. So it's like before you submit your form, you have to get it checked from somebody else. That is EQCR. Third person, other than the person who's filled it. Does everybody understand that? So say as an example, okay, the date of the board meeting of Geo Limited is say 25th of April. 25th of April 2018, say is the date of the board meeting. So obviously this is the date when the auditor will have to sign the report. So obviously if 25th of April the board meeting is there, by 24th of April obviously the EQCR should be done. Yes, if 24th April EQCR should be done, by 23rd April partner review should be over. If partner review is to be over by 23rd April, manager's review should be over by 22nd April. If manager's review is to be over by 22nd, say team senior review should be done by 20th. And if team senior review should be done by 20th, articles ka field work should be completed by 17th April. And if articles field work should be completed by 17th April, then they should start with the audit on say 5th of April. So we do a back working. So client asks us, this time from which date are you coming for the audit? So he says, you tell me the date of your board meeting. He says, this time our board meeting is very early. 18th April only board meeting is there. CA says, okay, I'm coming from 1st April only. You understand? No, you have to do a back working, keeping a provision, for each of these requirements which are to be, all these reviews which are to be done. Okay, EQCR, engagement partner, manager, team senior, and the articles field work. Right, so that is EQCR, that is the Engagement Quality Control Review. And before the report is issued, obviously when do you show your form to your friend? Before you submit it to ICAI. And so before the report is issued, this is not what you call it as peer review. Peer review takes place later on. And after the audit is over, after, the board, nothing to do over here. That's just a formality, different process altogether. This is before you issue the report, you have to get the EQCR of the file done. Right, and again, what are the areas covered in the EQCR? Right, what are the areas covered in the EQCR? Right? It says, see, the engagement team's evaluation, page number 1.8, in the firm's independence in relation to the specific engagement. Last line of page number 1.8. Last line of page number 1.8. Independence in relation to the engagement, the significant risks identified and the responses to those risks. Judgments made, particularly with respect to materiality and SR. Consultation on matters involving differences of opinion, experts' work, significance and disposition of corrected and uncorrected misstatements. Do you understand? Corrected and uncorrected misstatements, significant risk, response, 3 best friends, 315, 330, 450. Matters to be communicated to management TCWG, documentation supports the conclusions reached, and most important, the appropriateness of the report to be issued. Okay, whether the report being issued by the engagement partner, the firm, whether the report is appropriate. You understand? So again, see, only the cream in the audit. You understand now? They are not saying inventory ka whether the physical verification has been done, investments ka certificate has been checked, property ka title deeds have been checked. They are not going into that much of detail in the review. What they are saying, only all the cream matters. Okay, whether any threats to independence were identified, what were the SR, what were the responses, what were the judgments, what were the areas where consultation was taken. Because obviously if consultation is taken, that matter would have been a critical one. So consultation taken, what are the corrected misstatements, what are the uncorrected misstatements, is there adequate documentation of the work done, and most important, whether the report issued is appropriate. You understand, right? So that is EQCR, right? In your exams, there could be a question on this one. You understand, areas to be covered or by in the engagement quality control review. Right, then consultation is nothing but using the work of an auditor's expert, which I will discuss with you in SA220. Difficult contentious matters for areas other than accounting or auditing. And a specialized knowledge in a field other than accounting or auditing, the auditor may use the work of an expert. So obviously you need to do the evaluation of the work of the expert before using his work. And the next one, engagement documentation, right? That is, you need to keep the appropriate documentation for the work done. This engagement documentation is whose property? Yes, engagement documentation, it is the property of the auditor. He may at his discretion make portions of or extracts from his working papers available to the client. So in our example, what is the date of the board meeting of the client? 25th of April 2018. So on 25th of April, if you have a look at the file, the audit file which you have built up in the audit, it's like almost done but not done. कि 90-95% of the entire documentation has been done. But you know, एखादा voucher, एखादा paper का working paper का review, little bit of one evidence to be obtained, one tick to be explained, little bit of referencing to be done, maybe, you know, something or the other, some loose ends might be there in your file. And obviously, substantial part, the entire audit has to be done before 25th of April. Because in our report we have written, we believe that the audit evidence we've obtained is sufficient and appropriate. But what may happen in your audit file, as on the date of the report, 25th of April, there might be a few loose ends. So by when should you make the file ekdam done? It is almost done, but not done. So now today, 25th of April, I signed the report. And now by what date should I make the file done? Yes, what does it say? The assembly of the final audit file, not more than 60 days after the date of the auditor's report. Not more than 60 days after the date of the auditor's report. The assembly of the final audit file. Otherwise, what happens? 25th of April audit is done. Now you're so tired. Already so much of late sittings done to complete that audit. Next day you go to office and you put that file into the cupboard. And once it is in the cupboard, it will come out of the cupboard directly for the next audit only. So what you realize, you know, okay, whatever was left has been left only. So that is why standard says quality control requirement कि within 60 days टकाटक. You know, all the finishing touch, whatever are the loose ends in the audit file, that have to be completed within 60 days. Then, for how many years will you retain this audit documentation? Not less than 7 years from the date of the auditor's report. Books of account are to be maintained by the client for 8 years. Audit working papers are to be kept by the auditor for not less than 7 years from the date of the auditor's report. Okay, and nowadays what happens at the client place, we have two files. We have a hard file and we have a soft file. You understand? Just like, you know, Tally, it's an accounting software, you know, wherein you create a new company. Whereas nowadays there are a lot of audit softwares also in which you can create new clients. You understand? So now say all of you are members of the team and all of you have that audit software on your audit file. And there is a team senior. Now this team senior, he will open a full file. You know, he'll say create a new file. And then it will be name of client Geo Limited stat audit for year ended 2018. And size of the entity, large entity, and say it is into real estate. And then he'll say create a file. And then that audit software will generate, you know, at least 200 documents in that audit file. Right from the planning to the risk assessment to the TOC to cash and bank, inventory, investments, going concern, subsequent events, CARO, accounting standard checklist, SA checklist, all that forms and checklists will be there in that audit file. Now obviously the team senior is not going to fill each of these forms, KOC ka form, all forms are there in that audit file. Now what all you other members in the engagement team will do, you will create a blank file. And this team senior, he has created a full file. Now what he'll do, by pen drive, he will outsource all the areas which are going to be done by all you people. So you're going to do inventory, you're going to do share capital, you're going to do loans, investments. So you'll give it by pen drive. And then you will take it on your laptop and take the original ones from there. Once the team senior gives it from his laptop, you know, he has the carbon copy. Carbon copy matlab kya? Isme there cannot be any change made. Otherwise, control will be very difficult, na, which is the final version. So once the team senior outsources it, he has the carbon copy. And you people, you will have the original copy. Then you will do the work in your respective area. You will fill in the entire files and forms. After you finish the work, you'll again give it by pen drive to the team senior. Now you will have the carbon copy and the team senior will now have the original copy. The standard says that this procedure should be there in the firm for distributing the engagement documentation at the start of the engagement. Distribute kiya na team senior ne. Then processing it during the engagement. So all of you filled up your respective areas and collating it towards the end of the engagement. So again collected it back all from you towards the end of the engagement. And obviously, what does this say? This soft file which is there, है ना, a backup should be taken of that file on a regular basis. And again, password restricted access should be given to that file. And a backup to be taken at regular intervals, and also password restricted access. Right, so if you see regarding engagement documentation, what does it say? Password to restrict access, backup routines to be taken, then procedures for properly distributing the engagement documentation to the team members at the start of the engagement, processing it during the engagement, and collating it at the end of the engagement. Have you found out? Page number 1.7, last 3 lines. Password restricted access, backup routines, and distributing, processing, and collating it. Yes, did you understand? Completion of the final audit file, 60 days. Retention not less than 7 years. And audit documentation is the property of the firm. Audit nahi, rather engagement documentation. Right, it is the property of the firm. Right. And the last one, differences of opinion. Now see, so many heads are working together. Engagement partner, manager, team senior, articles, EQCR, and sometimes you may also have an expert working for you for difficult contentious matters. So obviously so many brains, so many heads working together, there are bound to be differences of opinion amongst them. And differences of opinion within the members of engagement team, or with the expert. Like say for last 7 years, say example, for last 7 years, what was the combination? That manager for the assignment was S, and the team senior for the assignment was say W. So inka rapport was set. The style of working of the manager and team senior was acceptable to each other. What happened now in the current year? This was for last 7 years. Now what happened in the current year? This manager, he left the firm. And that is why a new manager, say Mr. T, has come on the assignment. And obviously team seniors, they can't afford to change. So you say at least you W, you continue on that assignment. And now big time conflict of opinion between these two. And this team senior says, how come you are raising an issue? Last 7 years I was doing the audit like that Mr. S never said anything. Why you are telling me? No, I will not do the work only. I will do it like this only. Team senior manager says, I will not review the work only. And sabse jada high level ego problem is between engagement partner and EQCR. You understand now, this fellow, he is saying qualified opinion. EQCR 24th April, he says, if you don't change it to adverse opinion, I will not give my signature only. Because 25th April client meeting and 9 o'clock on 24th April, he says you convert your report to adverse opinion. Expert and engagement team में differences of opinion. So do you understand? Differences of opinion. Standard, it gives a one-line answer. What does it say? Differences of opinion within the members of engagement team, outside the members of engagement team, report not to be released till the matter is resolved. Baat khatam. Report not to be released till the matter is resolved. And if you issue the report without resolving the differences of opinion, it will be considered to be a breach of SQC1. And if you issue the report without resolving the differences of opinion, it will be a breach of SQC1. Right, so what does it say? Report not to be released till the matter is resolved. Right, report not to be released till the differences of opinion have been resolved. Do you understand? Right, so that is engagement performance. DSR, EQCR, consultation, engagement documentation, and then you have the differences of opinion. Okay, right, yes, so that is, and then last one we've already seen, monitoring. Right, yes, in the beginning of SQC1, in the beginning of SQC1, They have given the two objectives of SQC1. Can you tell me what are the two objectives of SQC1 given in the standard? That the firm complies, performs and complies with the professional standards and the legal regulatory requirements. That the firm complies with the professional standards and the legal regulatory requirement. And second, what? The firm's reports issued are appropriate in the circumstances. The firm's reports issued are appropriate in the circumstances. It says why you want so much of policies and procedures of the firm, why this quality control and all that. So it says these are the two reasons. Okay, one, in order to ensure that all the work which has been done by the firm is as per the standards and the legal regulatory requirements. And second, obviously the final deliverable of the firm is the report. So whether the firm's report issued is appropriate in the circumstances. And then tell me who is the leader for the purpose of SQC1? The CEO, the managing partner, the senior most partner of the firm also. These are examples of leaders for SQC1. So why policies and procedures? One, to ensure that the firm complies with the professional standards and legal regulatory requirement. And second, that the firm's reports issued are appropriate in the circumstances. Right, now come to the objectives of SA220. SA220. What is the title of SQC1? Quality Control for Firms. What is the title of SA220? Quality Control for an Audit of Financial Statements. And what are the two objectives of SA220? That the audit has been complies with the professional standards and the legal regulatory requirement, and the auditors, yes, are you all there? SA220. Look over here. Yes, page number 1.21. The objective of the auditor is to implement quality control procedures at the engagement level to provide the auditor with reasonable assurance that the audit complies with the professional standards and the legal regulatory requirements, and the auditor's report issued is appropriate in the circumstances. So SQC1, they said firm, and SA220, they are saying audit. So look at the titles of the two essays only. SQC1 is quality control for firms, and SA220 is quality control for an audit of financial statements. So obviously what SQC1 talks of at the firm level, same thing SA220 talks of at an audit level. Okay, but who is the leader for the purpose of SQC1? The CEO, the managing partner, the senior most partner. Who will be the leader for a particular audit? The engagement partner. Yes, he will be the leader for the purpose of SA220. That's the only difference. So in your exams, you need to check whether the question is asked at the firm level or whether it is asked at the audit level. If it is audit level, then SA220. If it is firm level, then SQC1. Or best way, as per SA220, read along with SQC1. Because that is how it is, firm and audit. So one standard pay, one standard free. SQC1 pay, SA220 free. Right, because what I have written over there, same points, Lihem. And then I have written in line with the policies, procedures designed in SQC1 at the firm level. Does everybody get that? Yes, the firms comply with the professional standards and legal regulatory requirement. The firm's report issued is appropriate. And SA220, the audit complies and the auditor's report issued is appropriate in the circumstances. And here the leader would be the engagement partner. Right, come to question number 1. Right, question number 1 in the question bank of SA220. Yes, you are an audit senior working for the firm Kala and Company. Are you all there? Right. You're currently carrying out the audit of W Limited, a manufacturer of waste paper bins. You're unhappy with W Limited's inventory valuation policy. I have raised the issue several times with the audit manager. He has dealt with the client for a number of years and does not see what you're making of us about. So there are differences of opinion, no? Right, between the team member and the audit manager. He has refused to meet you on site to discuss these issues. Then the former engagement partner to W Limited retired 2 months ago. Yani this audit is without an engagement partner. So second problem, they've not identified an engagement partner. As the audit manager had dealt with W Limited for so many years, the other partners have decided to leave the audit of W Limited in his capable hands. So what the other partners are saying, that partner has left. So now you do the work. They've given the work to the audit manager and then they'll say we'll only sign the report. Comment on the situations outlined above. So one SQC1 SA220. Now this is at audit level, so SA220. So one, there is no engagement partner. Second, what does it say? There is differences of opinion. And third, there is no direction, supervision, review of the work done. No review of the work done. Right, so several quality control issues are raised in the scenario. One, engagement partner. An engagement partner is usually appointed to each audit engagement undertaken by the firm to take the responsibility for the engagement on behalf of the firm. Assigning the audit to an experienced audit manager is not sufficient. The lack of an engagement partner also means that several other requirements of SA220 about ensuring that engagement is in relation to independence, DSR of the audit are not in place. Then conflicting views. In this scenario, the audit manager and the senior have conflicting views about the valuation of inventory. This does not appear to have been handled well, with the manager refusing to discuss the issue with the senior. SA220 requires the audit engagement partner to take responsibility for settling the disputes in accordance with the firm policy in respect of resolution of differences required by SQC1. And we said a report not to be released till the matter is resolved. In this case, the lack of an engagement partner may have contributed to the failure to resolve the disputes. In any event, at best, the failure to resolve the differences of opinion is a breach of the firm's policy. At worst, it indicates that the firm does not have a suitable policy concerning such disputes required by SQC1. So one, there is no engagement partner. Second, there is no policy for resolving differences of opinion. And third, there has been no adequate DSR, direction, supervision and review. Right, so all the questions they have prepared and kept it in the RTP. RTP November 16, RTP November 11, and next question also RTP November 15. So anytime, when they don't have the time to prepare a new question, they'll just copy paste this and put it in your exams, question number 1B. Right, next question. Suresh Chandra and Company has been appointed as an auditor of SC Limited for the financial year 14-15. Suresh, one of the partners of Suresh Chandra, completed entire routine work by 29th May. Unfortunately, on the next day, when he was going to office to sign the report, he met with an accident and died. Chandra, another partner of the firm, therefore signed the accounts of SC without reviewing the work performed by Suresh. Out. And now, without reviewing the work performed. Can one partner of the firm sign on behalf of another partner of the firm? Yes, one partner can sign on behalf of another partner, but not without reviewing the work performed. All the cream matters. Whatever cream matters which we talked of, at least those matters should have been reviewed by Suresh before signing the report. State with reasons whether Chandra is right in expressing an opinion on the financial statements, the audit of which was performed by another auditor. Right, so it says he should have another partner, he could sign, but only after doing the review of the work done. Right, so what does it say? May apply the review procedures, and then they have laid down what are the review procedures. Work has been done as per the professional standards, legal regulatory requirement, significant matters have been raised for further consideration, consultation has been taken, any need to revise the nature, timing and extent of work performed. The work performed supports the conclusion reached, evidence obtained is sufficient and appropriate, objectives of the engagement have been achieved. This is what you need to check in the review. Are you all with me? फिर आगे see what they say. Further, one of the basic principle. Oh, you remember basic principles governing an audit? Integrity, objectivity, independence. No. Those are ethical requirements. IOC, CPT. 9 basic principles governing an audit are different. In that 2 are common, integrity, objectivity. So, but that is not basic principle. You understand, no? In IPCC you had this, no? 9 basic principles. Old wala AS1 was basic principles governing an audit, no? Integrity, objectivity, independence, skills and competence, confidentiality, audit documentation, audit planning, audit evidence, audit conclusions and reporting, accounting system and internal control system, and very important, work performed by others. And fundamental principles to be followed by professional accountant, that is IOC CPT. You understand? So 9 basic principles governing an audit. Out of that, 1 is work performed by others. Can you use the work performed by others? Yes, but CTBR continues to be responsible. So further, one of the basic principles which govern the audit is that when the auditor delegates his work to assistants or uses work performed by other auditors and experts, he will CTBR. Did you find in your book CTBR? Continue to be responsible for forming and expressing his opinion on the financial information. However, he will be entitled to rely on the work performed by others provided he exercises adequate skill and care and is not aware of any reason to believe that he should not have so relied. This is the fundamental principle which is ethically required as per the Code of Ethics also. However, the auditor should carefully DSR, direct, supervise and review the work delegated. He should obtain reasonable assurance that work performed by other auditors, experts and assistants is adequate. Very important word. Okay, work performed by others. Can you use? Yes, but you need to direct, supervise, review. You need to check whether the work is adequate. In the given case, whatever happened. So what is the last line? He may rely on the work performed by CA Suresh provided he exercise adequate skill and due care and review of the work performed by him. Right, so that is SA220 on quality control for an audit of financial statements. Simply what they are saying, you cannot rely on the work of others unless and until you have checked the adequacy of the work. Right, it's a breach of SA220 read along with SQC1. Right, so that completes SQC1 and SA220. Right, coming to the next standard, SA300, which is on planning and audit of financial statements. Yes, planning and audit of financial statements. Yes, it is so said that if you fail to plan, you are planning to fail. You understand? Holds good for all walks of life, but more so in case of an audit. You understand? No, listed entity audit. Like, say if you're doing the audit of Reliance Industries, how much is their turnover? Yes? You said something? No, nothing. How much is their turnover? Reliance Industries? Yes, 4 lakh crore. You understand? 4 lakh crore. Yes, that's the turnover. We'll be later on seeing their balance sheet, profit and loss also. Okay, so obviously such a huge company audit. You understand? Say 36,000 crore ka cash in bank. So such a huge entity audit, 100, 200 people involved in the audit assignment. Obviously, you cannot think of doing such an assignment without having a proper audit plan. You understand, no? Say 23, 24 crore ka audit fee which you're going to receive for the year. So such a huge audit you cannot think of without preparing an audit plan. So you're planning regarding what they say, what we talked in SA220, direction. That's nothing but planning. Okay, so what are the advantages? Why? Why not just decide, okay, we'll do the audit and just start doing the audit? Why spend first 1 or 2 days or 2, 3, 4 days just preparing a plan for the audit? Like, if you start your leave for, when is your attempt now? May 17th, say, and say you start your leave on 15th of Jan. And then 15th Jan, just directly start studying. You understand? Why look into, okay, what is the time available with me, how many subjects, what books, and anyways, first revision and test series and all. Why just directly every day, just as it comes, start reading. Whatever book comes in your hand, start reading. Everything is new only. You understand? Just start reading, open-ended. Don't keep a track. How much is done? How much is left to be done? Will it create a havoc? You understand? You have to prepare a meticulous plan. And when you have to study also. So obviously here also the auditor needs to prepare a full-fledged, well-designed, completely described audit plan. So what are the faida? What is the advantage? What is the benefit of preparing such an audit plan? Easy monitoring. So DSR, direction, supervision and review of the audit becomes proper. You can properly direct, supervise and review the audit. Okay. Okay, so it can be used for future references. Okay. Work will be completed on time. Okay. Proper selection of engagement team members. You understand? You know what is the work to be done. Then you know what work is to be given to whom. You obviously know articles course you can give cash and bank, maximum investments or other income. You cannot give them provisions of fixed assets or inventory to be checked in the audit. They don't give first year article. First year article what? Cash and bank mein khush raho. You understand now? Purchases and cash and bank, BRS, bank reconciliation statement, confirmation and statement and ledger account. So selection of selection of engagement team members. Then coordination with the other auditors and experts. Like say some of the branches are being audited by branch auditor. You are taking the opinion of an expert for some legal or technical matter. So obviously you need to tell the other auditor, branch auditor, your report should come to us by 20th of April. Final report is to be issued on 25th. You have to tell the expert, your opinion has to come to us by 17th of April. Final report is to be issued on 25th. So coordinating with the other auditors and experts. Then it talks about 3 more advantages. Appropriate attention, potential problem and efficient effective manner. So AAPPEE. Appropriate attention is devoted to important areas of audit. So should not happen that cash and bank and other income you're checking for last 14 days in the audit and inventory fixed assets half day finished. So appropriate attention is devoted to important areas of audit. Potential problems are promptly identified. So when you prepared the plan itself, you came to know कि इतने कम लोगों में ये audit 20 दिन में खत्म नहीं हो सकता है और 2 लोग लगेंगे. कि यहाँ पे expert का opinion लगेगा. So potential problems are promptly identified and work is conducted in an efficient and effective manner. Right, you're preparing a proper plan, so obviously work will be conducted in an efficient and effective manner. You understand? So one exam we had asked this question, objectives of audit planning. So objectives of audit planning, advantages of audit planning are one and the same. So one, it facilitates proper DSR, direction, supervision and review of the work done. So again, this is, I told you now, this is one more technical term added to our dictionary, DSR. Like we said, AFRF, SAAE, TCWG, वैसे DSR. Direction, supervision and review. Coordination with the other auditors and experts, selection of the team members and AAPPEE. Objectives of audit planning. Right. Right. Then after that, now in SA300, we talk about the preliminary engagement activities to be undertaken. Preliminary engagement activities are raised to 10. है ना? Read, revise 10 times before the exam. Question not asked so far, awaited to be asked. Preliminary engagement activities. In which standard are we? 300. What is that standard about? Planning. Okay, auditor, what, how, and how, what you should prepare an audit plan. But the standard says, auditor, wait. Before even you start preparing an audit plan, before even you start, preparing your audit plan, there is some preliminary, there is some basic work which you first need to finish. And once you finish that, then you start preparing an audit plan. It's like, first you decide whether you have to write one group or whether you have to write both groups, whether you have to write this attempt. And then you start preparing your timetable. So that's preliminary ना. अभी तुम्हारा ये फिक्स नहीं है कि तुम्हें एक ग्रुप लिखना है कि दो ग्रुप लिखना है या अटेम्प्ट लिखना है कि नहीं. Where you will start preparing audit your timetable. Right now, 2018 and 2017. 2018 audited by PwC. 17 also audited by PwC. Right. So this is an instance of a recurring audit engagement. 18 audited by PwC, but up to 17 no audit was being conducted, or up to 17 the audit was being conducted by KPMG. So these two are instances of initial audit engagements where either the last year was not audited or it was audited by a predecessor auditor. Is that okay for everyone? Right. So now these preliminary engagement activities have been divided under two. Preliminary engagement activities for a recurring audit engagement and preliminary engagement activities for an initial audit engagement. Done? Right? These preliminary, मतलब audit plan बनाने के पहले, do you understand the heading now? What work is to be done? This work has been divided under two, recurring के लिए and initial के लिए. Right, tell me, before preparing an audit plan, what preliminary work should you do? A program is audit plan only. Yes. KOC, but KOC will be mainly for initial audit engagement. Recurring audit, I already have knowledge of client's business. Very good. Or previous year audit report, that will come in KOC. But if previous year has been audited by another auditor, in case of initial audit engagement, I will take an NOC, no objection certificate, if any, from the predecessor auditor. If last year was not audited, then there is no question of NOC. But if it has been audited by predecessor auditor, then you have to take a NOC, no objection certificate from any or the predecessor auditor. And that's coming in the plan. A selection of engagement. वो अगर audit करना है तो that will come in the planning. Yes. हाँ, okay. Legally viable or not? So, terms and conditions of the engagement. So, rather that would be issue of the engagement letter to the client in accordance with SA220, in which you would have also written the preconditions for an audit. For both, recurring audit also and for initial audit also. The preconditions for an audit. Like, you've written in the engagement letter to provide the auditor with all information. They are telling you, CA will not give you information regarding inventory. So don't prepare plan for inventory. For law you have exemption. Then why prepare a plan for law? You understand? No. So engagement letter, है ना, putting across the terms and conditions and the preconditions. This is what you will have to do before you prepare the plan. If they say your terms and conditions are not acceptable to us, no going for the audit, no preparing the plan. Right. Next one. Whether
The type of audit, whether it is a special
engagement letter, na, terms, objective, scope, everything made clear. हाँ वही अपॉइंटमेंट हुआ तभी एंगेजमेंट लेटर इशू किया एंड बिफोर अपॉइंटमेंट रिटन कंसेंट ऑफ द ऑडिटर वेदर एनी डिस्क्वालिफिकेशन ऑफ 141(3) हैज बीन अट्रैक्टेड सो टेकन केयर ऑफ वेदर यू कैन कंप्लाई विद द ethical requirements including independence in accordance with SA220. Why am I writing SA220 and not SQC1? It's at the audit level, no? It is not at the firm level that I'm talking about. For a recurring audit, the continuance of the client relationship. The continuance of the client relationship, and for an initial audit, very good, the acceptance of the client relationship. And you have decided Kingfisher audit, even they give me 10 crore fee, I'm not going to go. You understand? No. So not to accept only, not to continue only this assignment. So obviously no preparing audit plan. So continuance, acceptance again talked of in SA220. No talking SQC1. Firm level nahi na, audit level. And so preliminary engagement activities. Recurring audit engagement and initial audit engagement. Right, so 2 additional points for initial audit engagement, NOC and KOC. 2 additional points for initial audit engagement. What are those? NOC and KOC. Done, everyone? Okay, right, so that's the preliminary engagement activities. So 2 questions I have discussed from SA300, the objectives of audit planning and the preliminary engagement activities. Now I come to the factors to be considered in the development of an overall audit strategy or plan. Factors to be considered. So now you've been told, okay, prepare a timetable or prepare a plan for doing the audit of Geo Limited. Okay, is there any difference between a strategy and a plan? Or these homonyms, like similar words? Strategy and plan? Strategy is long term, plan would be short term. What else? Strategy will come before and plan will come after, no? Right, and say example strategy, you will decide upon what is your objective. And based on your objective, you are to achieve that objective, what procedures are to be followed. You understand? Say there is a change in your strategy. So obviously accordingly you will have to change your plan also. Earlier you had decided that one subject I'll finish 1 subject at a time. 8 days, 10 days, morning to evening, day and night I'll study only accounts. Then after that next 8 to 10 days I will study only SFM. The perfect strategy to fail. If you want to fail, you follow this strategy. Doing 1 subject for 8 to 10 days only. You see, no, some students have a reason for this, you know. कि फिर link टूट जाता है. Oh, what link? In school also you had periods, na? Every day timetable was given to you. 45 minutes and then short break, long break, and so you are used to having a break. You understand? So at least 3 subjects per day, at least. You understand? So earlier you had decided this dangerous strategy of 10 days, 1 subject only. Right, by the time you finish the 4 subjects and go again to that first one, blank. Anyways it is blank, but in this case it is more blank. Okay, right. So then you decide to change your strategy to, say 3 subjects per day. So obviously accordingly now you'll have to change your plan also. You understand? And abhi audit plan mein bhi kaisa hai? It is step by step, like audit procedures, na? Risk assessment procedures. Jab tak risk assessment is not done, we cannot plan further audit procedures. Risk assessment, ek bar where there is more RMM, gulab jamuns, where to give more, then we'll come to know na. So you say no, right now only decide risk assessment further. You say it's not possible. First we'll have to finish risk assessment. And after we finish risk assessment, then we can go to the further audit procedures. Then based on finding furthermore we'll have to make a change. And so they are in line. So you cannot distinguish, but it's like one after the other. First there is a strategy, then there is a plan. It's like, strategy you can call it as a blueprint. And plan is the actual execution of the same. Right. So what are the factors to be considered in the development of the overall audit plan or audit strategy? Sabse pehle, obviously when you prepare an audit plan, you should be very clear regarding what is the objective and scope of the audit. That first thing you have to keep in mind. Then after that, you need to apply your professional judgment. Okay, which areas significant effort is going to be required to be put by the members of engagement team. Like say by your IPCC or your final attempt ka experience, okay, SFM you are always goofing up in the exam on account of those formulas. Always there is something going wrong in the exam. Or it has happened in the past with you. So obviously this attempt when you prepare for, you are going to take special care of those formulas in SFM. And you have come to know that Geo Limited has come up with an IPO during the year. So you certainly know that inventory, equity at Geo Limited has to be checked more in detail. More effort will be required in that area. You know that Geo Limited ka that plant ka construction was going on. And this quarter, their entire plant ka capitalization is over. So you know, okay, fixed assets, you have to do a lot of effort, lot of checking in this particular quarter. So professional judgment as to which areas more effort is going to be required. Not doing donkey work, na, all areas equally important. We said, na, ABC analysis, risk-based audit of financial statements, don't forget that. And what did we say? Bowl of gulab jamun, 10 gulab jamuns and 2 gulab jamuns. And a risk-based audit approach. Then you have just completed the preliminary. Hai kya nahi? Preliminary khatam kiya and we came to the audit plan. So the results of the preliminary engagement activities. Preliminary say this previous auditor has told you, NOC, outgoing auditor, that something is wrong with the administration of the company. Now it's not necessary for you to, because of that, not to accept the assignment. You will accept, but will you now not be more careful? And so the results of the preliminary engagement activities. Then understanding the laws and regulations which are applicable to the entity. And second, how the entity is complying with those laws and regulations. So say to Company Factories Act is applicable, step 1. And second, how are you complying with the Factories Act? Step 1, Competition Act applicable. Step 2, how are you complying with that? So understanding the laws and regulations which are applicable and how they are complying. Step 1, say FEMA applicable. Step 2, what are the steps taken? Next one, performing the risk assessment procedures, IAOR. Because I told you, without risk assessment, TOC substantive we can't think of. Without risk assessment, TOC substantive can't happen. Right. Then after that, it says deciding upon the nature, timing and extent of resources required to perform the engagement. Such a nice point. Nature, timing and extent of resources. कि कैसे मतलब क्या? क्वालिफाइड ये आर्टिकल्स कब, यानी कि कौन से डेट से, एंड कितना, मतलब हाउ मेनी आर्टिकल्स, हाउ मेनी क्वालिफाइड, कैसे, कब और कितने लोग लगने वाले हैं ऑडिट करने के लिए. When, how and how many people are going to be required to perform the engagement. This you will have to decide at the planning stage, no? है ना, ऑफिस में स्टाफ प्लानिंग होता है ना कि दिस ऑडिट वील एटलीस्ट हैव टू सेंड 10 people. Out of that 4 articles and 6 CAs. You understand? So nature, timing and extent of resources required. Now in your firm there are 200 CAs working. Out of that you have to select those 4-6 CAs which you have to send to this particular assignment. So that is selection of the engagement team members. First you identified how many people are going to be required, and then out of the firm, you might have seen in your office all your managers ka meeting takes place and they do the staff planning, and for the efficient article and staff everybody is fighting. Everybody says no, this person I want in my team only. You understand? So selection of engagement team members. Right. Then after that, once the team members are selected, next problem, everybody wants to be the boss. Nobody wants to listen to anybody. So next, deciding upon the DSR. उनको आर्टिकल्स को तो बोल के रखना पड़ता है कि he is your senior, you have to listen to whatever is said. वो तो किसी का भी नहीं सुनते है ना. Big horns, antlers, है ना. CA final attempts cuts down those antlers, but till that time so huge ones, no end of the world. They think they've become only CA now. You understand? I'm not talking about you, I'm saying generally. Okay, DSR. Hello, so who will do the direction, who will do the supervision, who will do the review of the work? You have to plan that. When the direction, supervision, review will take place. Next one, determination of materiality. Because identifying and assessing the risk of material misstatement. So obviously materiality is to be considered right from the planning stage. So determination of materiality, involvement of other auditors, involvement of experts, involvement of the branch auditors, involvement of the experts, and last one, deciding upon the nature, timing and extent of the audit procedures to be performed. Factors to be considered in the development of the overall audit strategy. Keeping these points in mind, you have to prepare the audit plan. Objective and scope, which areas more effort, results of PEA, then the laws and regulations, how they are complying, risk assessment procedures, resources required, selection of those resources, DSR. Determination of materiality, involvement of experts, and also the audit procedures. Then, what does it say? Considering these factors, you have to prepare an audit plan. Do you understand? Considering all these things, you have to prepare an audit plan. And now say this is the audit plan which I have prepared. So now in this audit plan, what all description should be there is the next question. Description in the overall audit plan. So based on the above factors, you prepared a plan and you say, Madam, see, I have prepared an audit plan. So in this audit plan, what all should be described is what I am discussing with you right now. Nature, timing and extent of risk assessment procedures, nature, timing and extent of further audit procedures, nature, timing and extent of DSR. Then, audit procedures which you are going to perform to comply with the standards on auditing. Because in the report we have to write, we have. So all the procedures which you are going to perform to comply with the standards. And can it so happen that sometimes in the audit you revise your audit plan or strategy? Right. So any revision or any changes made to the audit plan or strategy, even that should be documented. So if you show to anyone your audit plan in practical language is also called as the APM. What is APM? Audit Planning Memorandum. APM. What is APM? Audit Planning Memorandum. Just looking out. Right, so that is regarding the description of the audit plan. Right, so factors to be considered in the development of the overall audit strategy or the audit plan. Then what comes before strategy or plan? Yes, strategy will come before, then it will be followed by a more detailed plan. So in the strategy you'll have the objective, whereas in the plan you'll have the detailed procedures which are required to be performed. Right, so let's have a look at the question bank of SA300. Right, let's have a look at the question bank of SA300. Right. So discuss the relationship between overall audit strategy and audit plan. 4 marks, November 2016. Yes, discuss the relationship between audit strategy and audit plan. So what did we say? Strategy comes before. So once the overall audit strategy has been established, an audit plan can be developed to address the various matters identified in the audit strategy, taking into account the need to achieve the audit objectives through the efficient use of audit resources. The establishment of the overall audit strategy and the detailed audit plan are not necessarily discrete or sequential, but are closely interrelated, since changes in one may result in changes to the other. The audit plan is more detailed than the overall audit strategy, that includes the nature, timing, and extent of procedures to be performed by the engagement team members. Planning for these audit procedures takes place over the course of audit as the audit plan for the engagement develops. For example, planning of the risk assessment procedures occur early in the audit processes. However, planning the nature, timing, and extent of further audit procedures depends upon the outcome of the risk assessment procedures. So again, what you could have done, for this question, you could have borrowed points from these factors to be considered in the development, the objective and scope. So this is like the most important, question from this particular essay. Because any question asked regarding audit plan, audit strategy, these are the points around which your answer has to rotate. These are the points around which your answer has to be given. Factors to be considered. Next one. As an auditor of a garment manufacturing company for the last 5 years, you've observed that a new venture of online shopping has been added by the company during the current year. As an auditor, what factors should be considered in formulating the audit strategy of the company? So again, now what they've done, formulation of audit strategy, general factors and specific factors for online shopping. General factors में the list which we made ऊपर, factors to be considered in the development of the overall audit plan. The objective and scope, the results of the PEA, Right, so the results, the team should also consider the risk of fraud, the degree to which the carry out further assessment of controls by reducing substantive, nature, timing and extent of procedures or changes to the previous year's testing, main points relating to planning and controlling the audit. So general factors you can write on the basis of factors which we studied. And then specific factors for online shopping. So what does it say? The classes of transactions in the entity's operations that are significant to the financial statements. Then the procedures within both information technology and manual system by which transactions are initiated, recorded, processed, corrected as necessary, transferred to the general ledger. Then related accounting records supporting information and specific accounts in the financial statements that are used to initiate, record, process and report transactions. Records may be in manual or electronic form. Above that it's written, this includes the correction of incorrect information. How the information system captures events and conditions other than transactions that are significant to financial statements. And controls surrounding journal entries, including non-standard journal entries used to record non-recurring unusual transactions or adjustments. Right, so specific factors for online shopping, near that you will write down SAE3420. Sorry, 3402. And specific factors for online shopping, near that you will write down SAE3402. Specific factors for online shopping, near that you will write down SAE3402. Assurance reports on controls at a service organization. तो ये वो वहाँ पे जो भी पॉइंट्स बताए ना, यूज टू इनिशिएट, रिकॉर्ड, प्रोसेस, करेक्ट द ट्रांजैक्शंस, करेक्शन ऑफ इनकरेक्ट इंफॉर्मेशन, है ना, मैनुअल सिस्टम एंड IT system, all that is given over there. Right, so computerized systems, how the transactions are initiated, recorded, processed, correction of incorrect information. Right, that is given in SAE 3402, assurance reports on controls at a service organization. Next one, A & Company was appointed as the auditor of Great Airways Limited. As the audit partner, what factors shall be considered in the development of the overall audit plan? So again, our master answer. Objective and scope, which areas more effort is going to be required. Next one, question number 4. Explain the objectives of audit planning. That's the advantages of audit planning. So that's only there in the RTP number 14. Next one, designing an audit strategy is the backbone of the audit planning process. So actually the same question has now come in number 16 with different words. Right, so Sodi and Associates have been appointed as the auditor of Raheja, engaged in export of handloom goods. The partner of the firm explains to the team that formulation of audit strategy will form the basis of audit planning to achieve the audit objectives in the most efficient and effective manner. As head of the audit team, narrate the steps involved in the formulation of an audit strategy. So actually in these steps now, and they have talked about the risk assessment procedures, IAOR. Because that's, we will get knowledge of client's business, and based on that knowledge of client's business, you will be able to develop your audit plan. Right, so they talk about inquiries of management and or obtaining knowledge of the client's business, performing analytical procedures. Right, then they talk about evaluating inherent risk, evaluating the internal controls, and based on that, then you prepare your audit plan. Right, so what you can do, you can write down over there IAOR and KOC as per SA315. As per SA315. Formulation of audit strategy. Formulation of audit strategy. So inquiry, analytical, then knowledge of client's business, and then based on that you can prepare your audit plan, right, based on the audit strategy. So it says SE 315-330 states that in performing an audit, the auditor should have sufficient knowledge of the business, sufficient to enable the auditor to identify and understand the events, transactions that in the auditor's judgment may have a significant effect on financial statements. Knowledge of business is a frame of reference for which auditor exercises professional judgment. Understanding the business assists the auditor in assessing risks, identifying problems, and planning and performing the audit more effectively. It also ensures that the audit staff assigned to an audit engagement obtain sufficient knowledge of the business. This would also help the audit staff understand the need to be alert for additional information. So that is first why KOC is required. Then the purpose of analytical at the planning stage is attention directing. Corroboration is not necessary. So unusual fluctuation you investigate in detail. The use of analytical procedures during the planning stage requires the extensive use of accounting and business knowledge and experience to assess the potential for material misstatement, yani ki risk of material misstatement. The third one, to assess inherent risk, the auditor would use his professional judgment to evaluate numerous factors. See, quality of accounting system, unusual pressures on management. So these are our examples of RMM at financial statement level and assertion level. RMM at financial statement level and assertion level. So high level of inherent risk. And then it says understanding the control environment is crucial to the decision on whether to make an extended assessment of the controls. Right, so what are the points in formulation of audit strategy? One, it talks about the knowledge of client's business, performing analytical, evaluating the inherent risks, and evaluating the internal controls. Right, so that is SA300, which is regarding planning and audit of financial statements. Coming to the next standard, SA320, which is on materiality in planning and performing an audit. SA320, which is on materiality in planning and performing an audit. SA320. Materiality in planning and performing an audit. Right? What is materiality? Any item or information which might influence the decision making of the users of the financial statements. So who are the main users of the financial statements? The shareholders. Right. Who is going to determine materiality? Auditor. But whose decision making is influenced? Shareholders. So obviously as an auditor you need to make a professional judgment. Okay, which could be that amount which might influence the decision making of the shareholders or of the users of the financial statements. So one, determination of materiality, auditor's perception is a matter of professional judgment. Then after that, can it so happen in the audit? Okay, auditor sets one level of materiality for the entire financial statements at 10 crore. But for debtors, he says materiality is 2 crore. Can he set such multiple levels of materiality? Yes, the auditor can set materiality for overall financial information as well as for individual account balances. So one, what did I tell you? Determination of materiality is a matter of professional judgment. Second, it says auditor can determine materiality for overall financial information as well as for individual account balances. Then the third one, I've already talked of it in SA450. Okay, materiality is both quantitative as well as qualitative in nature. So inventory valued by 20 crore quantitatively material. But sitting fees 10,000 paid in excess of what is allowed under company law, qualitatively material. Right, then it says some items which individually are not material. Some misstatements or items which are individually not material, but aggregate may be material. This I will discuss separately in the next concept of performance materiality. Okay, some items individually they may not be material, but if you take their total, then that total may become material. And it says sometimes even these statutory provisions contain an element of materiality. Like, Schedule 3, what does it talk about miscellaneous expenses? What does it say about the disclosure of miscellaneous expenses? No, not those miscellaneous expenses. General expenses. No, I'm not talking about those. Writing, what miscellaneous, deferred revenue expenditure. I'm not talking about that. General, printing, stationery, those type of general expenses. What does Schedule 3 talk about the disclosures? 1 lakh or above, you have to create a separate head. Below that, 1 lakh or 1% of revenue, whichever is higher, you have to create a separate head. Otherwise, you can show it as miscellaneous expenses. So, if say your printing ka kharcha is 70,000, so no need to create a separate head to printing and stationery. You can put it in miscellaneous. But if your printing and stationery is say 3,40,000, then you have to create a separate head. So, that 1 lakh over there is an element of materiality, no? Do you know the applicability of rotation of company auditor? Applicability. Which companies? To which companies rotation of company auditor is applicable?
Every listed company and public company and greater share capital more than 100 crore.
10 crore.
Every company, every private every listed as plus public.
Yes.
Listed company.
Listed. Yes.
Every listed company is compulsory. Then every public company कुछ clauses है.
क्या है?
Paid up और turnover और.
टर्नओवर तो है ही नहीं.
Borrowings है और financial institution और ये common points हैं.
Yes, rotation of company auditor. Which are the companies to which rotation is applicable? Listed companies, always. Net worth है ही नहीं. Unlisted public companies having paid up share capital of 10 crore or more. All private companies having paid up share capital of 20 crore or more. Or all companies, irrespective of the above two, having borrowings or deposits of 50 crore or more. So listed companies always, and other than that 10 crore, 20 crore and 50 crore. Okay, applicability of CARO to private limited companies? No. To which private limited companies is CARO applicable? Private limited banking insurance so anyways out. Who told you? He told you. No. Having paid up share capital and reserves and surplus of 1 crore or more, or having total borrowings from banks and financial institutions of 1 crore or more, or having total revenue as disclosed in Schedule 3 of 10 crore or more. Anyways, that is not our discussion right now, but I wanted to tell you that 1 crore, 10 crore, 10 crore, 20 crore, 50 crore, that's an element of materiality even in law. Sometimes even the statutory provisions contain an element of materiality. You understand? So this is first an initial discussion regarding the...
In case of Schedule 3, the miscellaneous expenses we have to disclose as a line item if it is
Exceeding, exactly.
But now the profit is of 1,50,000 and then it is not even though...
See, profit will come after deducting expenses. How will your profit come before deducting expenses?
After deducting expenses, the profit is of 1,50,000 and let's say printing expenses are 80,000. So it is material.
So wait, then you apply the second one now, 1 lakh or 1% of revenue, whichever is higher. So you apply the other one also, no, 1% of revenue. That also you need to check. Okay, right. So this is first the initial discussion regarding the concept of audit materiality. It's a matter of professional judgment. Materiality can be set for overall financial information as well as individual account balances, quantitative as well as qualitative. Individually, some items may not be material, but in the aggregate, they may be material. And sometimes even these statutory provisions contain an element of materiality. You understand? Next one. Hannah, there is a term over there which is called as performance materiality. What is this performance materiality? Yes, what is this performance materiality? Any guess? Question number 7, if it comes in the exams, write short notes on any 4 out of 5, performance materiality. Option.
And how should we consider materiality in performance of our audit?
This doesn't work over here. Okay. Okay.
Level below the materiality level.
Why?
If that level cross, then we have to extend our procedure of audit.
Why? Why do you set a level below materiality? Okay.
That if an amount is nearing materiality, we might need to revise our audit procedures or the audit strategy.
To reduce the risk.
That though we do for everything that we do in the audit is to reduce risk. Okay.
To quickly identify the areas where we have to extend our procedure.
No, mainly it's not for extending audit procedures that we have performance materiality. There's some other reason for it. Say for a particular population, you have determined materiality to be 10,000. So what is the significance of materiality being 10,000? Any individual misstatement, individual misstatement above 10,000 consider, any individual misstatement below 10,000 ignore, it is below materiality. This is the significance of setting a materiality level, say example at 10,000. Now say for a particular population, I selected 10 samples, I started checking each one of them. First sample I checked, no error. Second sample I checked, there was an error of 8,000, example. But individual misstatement below 10,000, ignore. Just to keep my example simple, say out of the 10 samples which I selected, in 8 samples individually there was an error of 8,000. What did I say? Below 10,000, ignore. Below 10,000, ignore. Below 10,000, ignore. What happened in that process? The aggregate of individually immaterial misstatements has exceeded materiality, 64,000 in my example. है ना, छोटा है छोड़ दो, छोटा है छोड़ दो, छोटा है छोड़ दो, उस चक्कर में बड़ा हो गया. You understand, no? Aggregate of individually immaterial misstatements may exceed materiality. This is a risk in the audit. You know, when auditor set materiality here, say this is 10,000, he found a risk. What risk he found? कि इसके नीचे के errors का total could exceed materiality. You get no? Right. And what is the funda of the auditor? This though I am sure you know by now. Okay, the moment he identifies a risk, he responds. What is the risk he is identified? Aggregate of uncorrected plus undetected misstatements could exceed materiality. And to mitigate this risk in the audit, he sets one more level of materiality below materiality, which is called as performance materiality. So, you know, it's not that I set the materiality at 10,000, then I checked the samples and then I found a misstatement and then I reduced the amount. Not that way. At the planning, determination of materiality stage itself, whenever I decide materiality, I find a risk. कि इसके नीचे के errors का total could be material. And to mitigate that risk, I set one more level of materiality below materiality, which is called as performance materiality. So say performance materiality, I set it at say 70% of materiality. So say it is coming to 7,000. So now all misstatements above 7,000 I will consider and below 7,000 I will ignore. Then after some time students have one more question. Okay, madam, now 7,000 ke above ka misstatement you will consider. What if 2,000 ka there are 20 misstatements? Like this, so if you start talking to me, then we'll have to take materiality 0 only. After some time you will say, madam, 1 rupee ka if there are 1 lakh misstatement. Then you will have to remove the standard SA320 in that case. No materiality, everything material. So somewhere we will have to take a cutoff. But what happened when he set the materiality? He found a risk, and to mitigate the risk, he set an amount below materiality, which is called as performance materiality. Can performance materiality be above materiality? Never. Because anyways, if the misstatement is above 10,000, it is going to be considered. The problem is of misstatements below 10,000, which in the aggregate could be material. Right. Performance materiality can also be described as tolerable misstatement in accordance with SA530. So when I go to 530, we'll again see performance materiality. Because earlier, now what I'm saying, I can tolerate misstatements only up to 7,000. Beyond that, it becomes an intolerable, yani it becomes material. You do not tolerable misstatement. Okay, the tolerance level, a monetary amount set by the auditor, about which he seeks to obtain an appropriate level of assurance. Okay, the actual misstatement in the population does not exceed the monetary amount set by the auditor. Auditor says this is the Lakshman Rekha. All the misstatements which are there in the audit, if they are below this amount, I can tolerate. Beyond this amount, I cannot tolerate. That is tolerable misstatement. So tolerable misstatement is nothing but the application of performance materiality as determined in accordance with 320. ऐसा लिखा है 530 में. क्या लिखा है 530 में? Tolerable misstatement is the application of performance materiality determined in accordance with SA 320. Does everybody understand that? Right, so that is performance materiality, right? Look at the words which are written in the book for performance materiality. Performance materiality. What does it say? An amount set by the auditor at less than materiality for the financial statements to reduce to an appropriately low level the probability that the aggregate of uncorrected and undetected misstatements exceeds materiality for the financial statements as a whole. Aggregate of uncorrected and undetected misstatements could exceed materiality for the financial statements as a whole. Right? That is performance materiality. And the next sentence, they call aggregate of individually immaterial misstatements. है ना, एग्री छोटा 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 मिलके मोटा. Aggregate of individually immaterial misstatements may exceed materiality. And to mitigate this risk in the audit, the auditor sets one more level of materiality below materiality, which is called as performance materiality. है ना, you've copied down this? Right. Then after that, just one more thing. Okay, it is said that there is an inverse relationship between materiality and audit risk. And the concept of materiality and audit risk are used throughout the audit. Throughout the audit, matlab 315, 330, 450. Now, if materiality is high, audit risk is low. And if materiality is low, audit risk is high. Yani ke there is an inverse relationship between materiality and audit risk. Higher the materiality, lower would be the risk. Lower the materiality, higher would be the audit risk. Yes, please explain. Inverse relationship. Why there is an inverse relationship between materiality and audit risk?
Whenever we fix our materiality at very high level, then we will check only the high level, high amount of transaction for misstatement, but there is more chances that misstatement is happening low transaction amount.
For example, the example we took that we set the materiality at 10,000 rupees, and we found that eight of the misstatements were amounting to 8,000 rupees. So we ignored them because our materiality level was 10,000. So there's an audit risk that 64,000 rupees might be materially misstated.
So then why is there an inverse relation? Give the verdict.
Materiality is high, we perform less audit procedures.
So risk is less.
Risk is high. So that's why risk is high, we perform less audit procedures.
If materiality is high,
Then we perform less misstatement, we perform less audit procedure,
huh.
and our risk will be high.
But risk is low now. You said materiality is high, no?
Ma'am, the value of transaction is high or the materiality is high. We will test more checking and our risk will be reduced due to it.
Okay. Right. Say example, let me take off two vouchers. One is of 70 lakh and one is of 7,000. Which voucher I will pakka check? 70 lakhs. So obviously there the risk is low. Right. And 7,000, I'll say, yaar, ignore. 7,000 rupee voucher, 8,000 rupee voucher, ignore. So item is not material. So that is why over the risk is high. So high value items are checked in detail. So that is why over there the risk is low. And generally low value items we don't check. So that is why there the risk is high. What is audit risk ka definition? No, that's the function. What's the definition? The risk that it is misstatement, no.
Audit procedures will not be effective.
No, that is detection risk. The risk, Raj, abhi आवाज आया तुम्हारा. Right. The risk that the auditor expresses an inappropriate audit opinion when the financial statements are materially misstated. The risk that the auditor expresses an inappropriate audit opinion when the financial statements are materially misstated. So the risk that the audit opinion may go wrong. You understand? So when items are material, they are checked in detail, so there the risk is low. And generally small value items are ignored. So that is why there the risk is high. Right? We'll complete with the standard after the break.